Okay, Math 12A. I'm recording this a little earlier than I normally record it because I have to go to a staff meeting and those take forever. So I didn't think I would have time to record it after that, which means that most, if not all of you, have not had a chance to hand in your homework on CPP and EI. I actually this morning forgot to attach the video at first. I'm really, really sorry about that. It didn't upload last night before I went to bed at like 11 o'clock. And so I went, oh, I'll just do it first thing in the morning. And of course, first thing in the morning, you know what I'm like. I didn't remember a thing. All right, but what we talked about in that video was CPP and EI, two deductions that come off of everybody's paycheck. Again, I'm not actually sure that they come off of yours simply because of your age. No other reason than your age. Once you become age of majority, all bets are off and they start taking everything off. So if you're not seeing CPP and EI deductions on your paycheck yet, you will, trust me. So one of the things I said was that CPP and EI deductions are taken off before they figure out how much tax you owe, because you don't get taxed on the money that goes into CPP and EI. Okay, you don't get taxed on that money because you don't get to keep it, so you don't get taxed on that money. You do get taxed on it though once you start taking out CPP. Once you get older and you retire and you start getting a CPP check, they will take tax off of that. Same thing with EI. They would take tax off of that. So that's when you actually end up paying tax on that money, is when you actually get that money. So once you have figured out CPP and EI, the next deductions that come off of your check are taxes. Everybody pays taxes. You pay two kinds of taxes in Canada on your paycheck. You pay more than two kinds of taxes in Canada, but on your paycheck, you pay two, all right? You pay federal tax. So that goes to the government in Ottawa, like Justin Trudeau right now. It goes to the federal government and it goes to running the country of Canada. The second deduction, the second kind of tax that comes off is provincial tax. That goes to the provincial government. So right now, Blaine Higgs and his government. It goes to the provincial government to run the province. If you live in a city or a town, another type of tax that you pay that we're going to get to when we talk about housing is you pay property taxes. Your property taxes are what go into running your local community, whatever that is, whether that's a city like Moncton or Dieppe, or if that's a little country community. For me, it's a little rural place called Pine Glen. All right, so my property taxes go into Pine Glen's upkeep and maintenance. All right. So how do taxes work? Again, we're going to do a simplified version of this, but it is still similar. It's just a little bit more straightforward. I don't know if you know, but rich people, people who make, I shouldn't say rich people who make more money have a higher tax. They're in what's called a higher tax bracket than someone who doesn't make a lot of money. So how that actually works is this. On the first certain amount of money that you make, wherever they decide that cutoff is going to be, for us, we're actually going to use the table that is on page 534 at the top. All right, we're actually going to be using that. And so those would be numbers from, or close to the numbers from the early 2000s, somewhere in there, all right? They have changed, but honestly, they haven't changed that significantly when you go and look at them. So for the first $29,590 that everybody makes, no matter whether you make $30,000 a year or $300,000 a year, it doesn't matter. For the first $29,590, you pay 17% of that back to the federal government. All right? But if you make more than $29,590, anything you make over and above that, anything between $29,590 and $59,180, you all of a sudden jump up and you pay 26% of your money back to the government. So the first $29,590, you pay 17%, then you start paying 26% after that. If you get above $59,180, you pay 29%. Now, there are higher tax brackets even than that. They don't bother to put them in here because we're not going to do examples where people are making like $500,000 a year. However, if you look on the federal government's website, they have a breakdown of all the different tax brackets. And once you get above, I think it's like 100 or 125, on anything you make above those numbers, you're paying almost 50% in tax. I think it's like 48% of it is now going to the government. All right? Now, how the provinces really work is in a very similar way to how I just explained the federal government works. They have the same thing where they have brackets. All right? Their brackets are slightly different. For instance, in New Brunswick, because the average salary is not the same as what the average salary in Vancouver or Toronto would be, our tax brackets are different for the provincial government. But again, they work pretty much the same. For the first $20,000 you make, you have to pay this percent to the provincial government. Between here and here, you pay, 25%. Whatever it happens to be. Again, you can look that up. Now, they're going to simplify provincial taxes greatly in here. There's a table, and because this textbook is from out west, it's only Western provinces. But rather than sit and have to do all different tax brackets again, they're going to simplify it, and they're going to say, if you're in British Columbia, you're going to just pay 50.5% of whatever your federal tax was. So whatever your federal tax amount was, you're going to pay half of that again to the provincial government. We're going to go through one, and I'm going to explain how we do it, okay? But it turns out that actually most people are paying usually between 40 and 50% in taxes back to the government. It's kind of depressing. All right. So there is step 1, step 2, step 3 written out for you on the middle of page 534. So step 1 is always figure out any tax credits that you have. Anything that is going to come off before you pay taxes on it. So I already said that CPP and EI are not taxable. In other words, they figure that out, they take that off first, and then they figure out the tax on that. But those aren't the only thing, okay? There are some things that come off of your paycheck that are called tax-exempt deductions. In other words, you do not pay taxes on that money. One of the big things that you don't pay taxes on is anything you put into registered retirement pension plan, so RRSPs. You may have heard your parents talk about those words before. So anything you're putting away for your retirement, they don't tax you on that, okay? So they take that off your paycheck first, and then they figure out your taxes. If your RRSP is not coming off of your paycheck, for instance, I take money out of my bank account once a month and put it into investments, into RRSPs. So when it comes every year, you have to pay taxes. It's tax season and you have to pay taxes. I actually get to say, hey, listen, you taxed me on this money because you didn't know I was going to take it and put it in our RSP. So now you have to give me back some money. For a lot of people, when they pay taxes at tax season, they actually have to pay taxes. I actually end up getting money back because I actually usually get about $4,000 back, which is awesome, because that is tax exempt. And then besides tax exempt, there are things that are tax deductions. There are things that if you give your money to these things, you get a certain percentage of it back. So any charitable organization that you give money to, whether it's the Cancer Society, our school, a religious institution, a homeless shelter, anything that is considered nonprofit, that's considered charitable giving, and you actually get money back for doing that. So that's why if you've ever raised money for anything, you give out tax receipts. That's so that I, as the person donating money, I have proof that I gave money to this organization. So when I do my taxes and I say I gave $500 to to Harvest House or whatever, then I actually get some of that money back because I paid taxes on that $500. But they're going to give me some money back for doing that, because really you're supporting your community, you're helping the community, and therefore you get kind of a credit for that. So it's step one is to figure out all those things that are tax credits, things that you're not going to pay taxes on. They're basically your CPP contributions, your EI contributions, and for our purposes, the other thing is everybody gets something called a basic personal tax credit. That is kind of a gift that the government gives you and says, we're going to give you this much money per year that we're not going to tax you on. So that has to come off. And they're going to use, everybody gets the same amount for a personal tax credit. They use the same amount in every problem. It's $6,456. I think now it's up to $7,000 or $8,000. That is everybody's personal tax credit, which basically means if you make less than that, you don't pay taxes. Which again is why some people who maybe don't work a whole lot, they might not end up paying taxes because they're not to a point where they have to pay taxes. So basic personal tax credit, CPP contributions, and EI. You need to figure those out first. Step 2, find the person's annual taxable income, which is their gross income minus the tax exempt deductions. We'll talk about that. Then determine the person's basic federal tax using the tables up on the top of page 534. And then you can, then everybody gets a tax credit, and we'll talk about that when we get to it, okay? So here we go. Example number 2 on page 534. You're really going to want to take notes on this because the steps stay the same every single time, all right? So I'm going to walk you through every single step and explain it as I go, all right? Dinah lives and works in Calgary, Alberta. For those of you questioning, that's Alberta, all right? Her annual salary is $35,000. That is her gross income, okay? She makes $35,000 a year. Her basic personal tax credit is $6,456. And again, that is standard across Canada. Everybody gets a personal tax credit. It is the same for everyone. No matter how much or how little you make, everybody gets the same personal tax credit. It is not this number. This is the one we're going to use. Each week, so weekly, we're going to write this down, okay? Weekly, she has the following tax exempt, meaning if you're exempt from something, you don't have to do it. So if it's tax exempt, it means you don't pay taxes on this stuff, okay? So weekly, she has the following tax exempt deductions. $5.50 per week for union dues. If you are part of a union, and a lot of people are, if you are part of a union, you have to pay dues to be part of that union. You have to pay a fee to be part of that union. It is not a choice to be part of that union. In order to work, for instance, nurses. Nurses have to be part of the nurses union. Teachers in the public system have to be part of the New Brunswick Teachers Association, which is their union. They must be. They won't be hired unless they're part of that union. They have to pay to be part of that union. You do not get taxed on the money that you pay to be part of that union because, again, not your choice. $60 weekly to an RRSP. Again, tax exempt. She doesn't pay taxes on that. She also, and this is not tax exempt, so not exempt. She also pays $8 per week for medical insurance. A lot of companies you work for will have a medical plan. We live in Canada where healthcare is free, in theory, all right? And it is in a lot of ways. For example, if I get sick and have to go to a hospital, I don't have to pay a bill. However, if I go to the hospital and I want a private room, I don't want to be put in a ward with 5 or 6 other people. If I want a private room, that costs you. If there are medications that I need, that is not covered under the Canadian healthcare program. I would actually have to pay for those drugs. So you get something like Blue Cross. For us, it's Great West Life is the company. There's several different companies that provide medical insurance. What that does is it covers things like dental, because dental is not covered under our healthcare system. If you want to go to the dentist, you pay for that unless you have medical insurance. If you have medical insurance, depending on what your plan is, you might pay 20% of your visit and the insurance company pays 80% of your visit. If you've got really good coverage, they might pay 100% up to a certain amount. Same thing with the eye doctor, medications, mine covers $500 per year for massage therapists or chiropractors or alternative medicines, those types of things. All of those are not covered under our country's healthcare system. They are covered under medical insurance. So if you work for a company, one of the benefits that they give you, one of the perks, is you get to be part of their medical insurance group. And so you can buy insurance at a discounted price. So this person is $8 per week for her medical insurance. If you get a really good company, they pay the entire thing. My husband's company, his medical insurance is just a perk of his job. We don't have to pay anything for it. The company pays for it. We don't have to. If I was part of the school's medical insurance, which I'm not because I'm covered under my husband's and his is paid for. But if I wanted to be part of the schools, how the schools work is that the school pays half of it and I pay the other half. So whatever the charge would be per month, MCA would pay half, and I would pay half. Now, I have opted out of that for me because I get a better deal going under my husband's plan. All these things you have to learn when you get older. Luckily, not, well, I'm teaching you now, but hopefully some of this will stick in your head for later. All right? But this is not tax exempt. You get taxed on that money, okay? Even though it's coming off of your paycheck. So, this is all the information I have. So the first thing it says is calculate Dinah's annual deductions for CPP and for EI. So how much is coming off of her every year for CPP and for EI? So CPP, remember, she makes $35,000 a year, but for CPP, you do not pay on the first $3,500 that you make. So we're going to take off $3,500. So 35,000 minus 3,500 is $31,500. So that's what she's going to be charged CPP on. And CPP is 3.2%. So I'm going to multiply it by 0.032. That is $1,008. So CPP for the year is $1,008. EI is easier to figure out because you don't have to take anything off at the beginning. It's just a straight 2.7% up to a maximum of $1,053. So 35,000 times 0.027 is 945. That is less than 1,053, so that's what they'll take off of her. So EI, $945 per year. So I've done part A. I have figured out her CPP and her EI for the year. All right. Now we get into the fun part. Okay, so now we get into the fun part. High rolls, find the total amount of income tax that Dinah will have deducted in a year. So the first thing we have to do is we have to figure out how much of that $35,000 is actually going to be taxed, all right? Because again, certain parts are not taxed, okay? Certain parts are not taxed. So, what is not taxed? Anything that is tax exempt, okay? Anything that is tax exempt, she is not going to pay taxes on. So, just a second. Shh, quiet down there. Okay. Okay. So, tax credits, okay? I'm just trying to find a way to explain this. Tax credits are your personal basic tax credit, your CPP, and your EI. I misspoke a little bit earlier. It's not that you don't pay taxes on this money. You do, but you get some of it back, okay? What is tax exempt is this stuff, okay? That stuff, the RRSP and the union dues are tax exempt, meaning you do not pay taxes on it at all, ever, all right? So, $60 per week in our RRSPs, $5.50 per week in union dues, comes to a total of $65.50 per week that is coming off of her paychecks that she does not have to pay taxes on. So how much is that per year? So we're going to multiply that by 52 because there's 52 weeks in a year. So 6550 times 52 is $3,406. That is tax exempt. So $3,406, this is tax exempt, meaning you do not pay taxes of any kind on that money. All right? So when the government is figuring out what are they going to charge her taxes on, they're going to charge her taxes on $35,000 because that's what she makes in a year, minus anything that's tax exempt, which is only the union dues and the RRSP. So minus $3,406. All right, so 35,000 minus my answer, that is $31,594. That is the amount that is taxable income. That is the amount that she is going to have to pay taxes on. All right, she doesn't pay taxes on the union dues or on the RRSP. That's why we took them off. All right, so you figure federal tax out first. So according to the table at the top of page 534, on the first $29,590, she pays 17% tax. So we're going to multiply this by 0.17. So $29,590 times 0.17 is $5,030.30. But, excuse me, but she doesn't make just $29,590. She makes $31,594. Well, $31,594 is in the next tax bracket. It's in that middle tax bracket. She's already paid taxes on the first $29,590. So we need to know how much more money needs to be taxed. So $31,594 is what she makes. She is already paid. We've already figured out the taxes on the first $29,590. So $31,594 minus the money we've already figured out the taxes on leaves us with $2,004. So there's $2,004 that they still have not figured out taxes on. They figured out taxes on the first $29,590, that's this. But she still has to pay taxes on that $2,004. But that $2,004 is above the $29,000. So what is the tax bracket above the first one? The first one was 17%. The next tax bracket is 26%. So this money that she makes above the $29,000, she actually has to pay 26% of that in taxes. So we multiply by 0.26, and that gives us $521.04. So for federal tax, for the first part of her money, she's going to pay $5,030.30, plus on that last $2,000 that she makes, she's going to pay $521.04, which gives us a total of $5,551.34. Okay? Now, here's the good news, the little bit that there is. That's a lot of federal tax to be paying. If she has to pay that much in federal taxes, that $35,000 is already down below $30,000 that she has left to live on. The government understands that that's a lot of money to pay in taxes, so they give you a tax credit. They give you some money back to go towards this, to subtract off of this, all right? So tax credits, everybody gets a personal tax credit of $6,456. Any money you pay into CPP is a tax credit, and any money you pay into EI is a tax credit. So everybody gets the personal one, and then there is CPP and EI. So the total amount of money that she has as a tax to use as a tax credit is $6,456 plus 1,008 plus 945, which is $8,409 as a tax credit. But that's more than she owes in taxes. The government's not that generous. They don't give you all of this back as a tax credit. They give you 17% of it back, same as what they took off up here. They give you 17% of it. So if I multiply this by 0.17, that is $1,429.53. This is your tax credit. What that means is that is money they put towards what you owe them. So you owe them $5,551.34, but they're going to give you a credit, just like if you walk into a store with store credit, they're going to give you this amount back. You have $1,429.53 as a credit, so that you get to subtract that off. So $5,551.34 minus my tax credit of $1,429.53 is $4,121.81. So I'm running out of space. In federal tax, you are going to owe $4,121.81 per year to the federal government, okay? So, to recap, we figured out on the first $29,590, you owe 17% of that, $5,030.30. On anything you make above that, which you made $2,000 more than that, you owe 26%. So that was another $521.04. So in total, she owed $5,551.34. But the government gives you a tax credit. They give you a personal tax credit. You get a credit towards your CPP and a credit towards your EI. So you get a credit towards all of those added together. You get 17% of it, okay? Which gave us a total credit of $1,429.53. That is what gets taken off of what you owe for federal tax. So that in the end, what I end up owing to the federal government is $4,121.81. All right? So that's federal tax. Now we have to figure out provincial tax. And I said provincial tax actually works very much in the same way that federal tax does, but for our purposes, we're going to simplify it. Provincial tax, according to the table, this woman is in Calgary, Alberta, and that is 45.5% of your federal tax. So, in federal tax, we figured out that she owes $4,121.81. She's going to pay 45.5%, whatever 45.5% of that is, they're going to pay that in provincial taxes. So $4,121.81 times 0.455, I added 125, so there we go, is $1,875.42. This is provincial tax. This is what she owes to the province. She owes $4,121.81 to the federal government. She owes $1,875.42 to the provincial government. So I'll just write it down here. Provincial tax, $1,875.42. So it says find the total amount of income tax that she will have deducted. So income tax that Dinah will have deducted, she will have her federal tax of $4,121, $4,121.81 in federal tax, and in provincial tax she will have $1,875.42. So in total, $5,997.23. So almost $6,000 is going to come off of her income just for taxes. All right, now the scary part, Part C. Part C says determine her net annual income. Determine the amount of money she will actually have to go and pay her bills, to pay her rent, to pay her car payment, to pay her car insurance, to pay for gas, to pay for food, to pay for life insurance, to pay for her tithe, to pay for entertainment, to pay, I'm trying to think of bills that I pay, to pay anything that she decides that she's going to purchase, to buy, to live, to whatever. How much money will she have per year to do that? All right, so she makes $35,000 a year. We already said that $1,008 is going to come off of her for CPP. $945 is going to come off for EI. $4,121.81 is going to come off for federal tax, and $1,875.72 is going to come off for provincial tax. Now, that tax exempt stuff, it comes off her paycheck too. So we have to take that off too, right? So $3,406 for RRSPs and union dues come off of her paycheck. She doesn't have to pay taxes on it, but it still comes off of her paycheck. And the one thing we haven't talked about yet is this medical insurance. It's not tax exempt, it's going to get taxed, so it comes off at the very end, but $8 per week. So 8 times 52, 8 times 52 is $416. So she's also $416 per year is coming off for her medical insurance. That's it. Okay, this tax credit is not money that comes off of anything. It is a number that they use to figure out how much money they will give you back in taxes. So that doesn't come off of anywhere, thankfully. All right. So now these are all my deductions. So she started off saying, I make $35,000 a year. That's awesome. All right, so $35,000 a year minus $1,008 for CPP, minus $945 for EI, minus $4,121.81 for federal tax, minus $1,875.72 for provincial tax, minus $3,406 for RSPs and union dues, minus $416 for medical insurance. That leaves her with $23,227.47 left per year to live on. So if you want to know what that is monthly, in a month, we could divide that by 12. It didn't ask us this, I'm just doing this for interest's sake. If we divide that by 12, she has $1,935.63, actually no, 62 cents left to live on per month. Can I tell you that if you live in Calgary, your rent is probably about that amount per month? So she needs a new job. So that is the steps you have to take. They're not small, right? They're not small. There's a lot to it. Okay, there's a lot to it. You do not have to memorize any numbers. They will all be given to you. What you have to know is understand the difference between tax exempt, stuff I don't pay taxes on at all, versus tax credits, which you get a personal tax credit plus your CPP and EI. Those are your personal tax credits. You get 17% of that back. I would suggest that you watch this worked example more than once, and maybe even watch the first step, do it in your homework, get that down, watch the second step, do that second step, okay, so that you work through it one piece at a time, okay? There will not be 6 million of these to do as homework because that's not fair. Can you imagine doing a bunch of these? There are a few, but it doesn't ask you to do all of this. It will ask you to do one or two things. It won't ask you to do everything that this is asking you to do. Have a good weekend. My phone is ringing, so I will talk to you again soon. Bye.